Welcome to the Money Factor. Today we're going to be talking about cash flow management and PPP loans. I'm Ian Varley, CEO of Eagle Business Credit. I'd like to welcome back with me here today Steve Nevin from B2B CFO. Steve's company helps a lot of small businesses and larger businesses as well with their cash flow management needs. We're going to talk a little bit about the book that you've come up with, The Danger Zone. I think there's some really good information in there. So thank you, Steve.
Okay, well, Ian, thank you for that introduction. It's a pleasure to be back here on the Money Factor. Today, more than ever, cash flow is what keeps business owners up at night.
Yep.
It's like fuel in an airplane. You can never have enough of it unless, of course, you're on fire.
Yeah.
Actually, cash flow is something that often business owners don't know how to track. They don't understand why, once their sales start to increase, very often their cash dwindles.
Yeah.
And they're saying, well, how can that be? If I drive my sales, I ought to have more money in the bank. But in fact, the difference between cash and sales is really timing.
Right.
How often and how quickly you get paid by your customers versus how often and quickly you have to pay those that you owe money to.
That's exactly right. And that's one of the themes that you bring up here in The Danger Zone. And I really read in detail with this, when a company is growing fast and they exceed their available cash, then the future of the company may be in jeopardy. Couldn't put it any better. You've got to manage cash.
That's right. And it's surprising how many business owners do not understand how to forecast cash flow.
Yeah.
And these are, entrepreneurs who have started companies before. And, they can put together a projection.
Right.
I think, my sales will go this way and here are my expenses. But they really don't understand the concept of cash flow. So this is one of the key areas that B2B CFO, our partnership, focuses on with our business owner clients. We help them understand how to forecast cash. Mm-hmm. We direct them towards areas that are key items where they can preserve cash. So, for example, receivables financing, right? Which is what you do. So we come in there and we see a business where they're not getting paid until 45 to 60 days out.
Right.
And when I ask them about that, they're saying, well, we don't want to call the customer, we'll insult them.
Yeah, exactly.
Which always blows my mind.
Yeah, we find that all the time. I mean, it's true. They're happy to take a new order. They're less happy to talk about payment. And it's just a polite phone call. All you have to do is ask about the status of the invoice, right? It's not a collection call.
That's right.
We have some people that use us just for that.
Oh, yeah.
So, it really helps them to manage those receivables and make sure that they are bridging that gap. Because you're exactly right. It is that gap between when you've made the sale, you've issued the invoice with credit terms because you want to remain competitive, and you're growing. So all of your cash flow and your working capital is getting tied up in your receivables, and it's a problem, right?
Yeah, and most companies do not have people who specialize in receivables collections. They don't really know how to do it. So when we walk into a company and we see that as an opportunity to improve cash flow, we make an assessment as to, is this a company that lends itself to a tool like factoring?
Right.
And when we see that, we of course know we're going to call Ian at Eagle Business Credit.
Please.
And in some instances, the problem isn't that severe, but they could still shorten the time frame of collections by a week or two just by implementing some basics in collection.
Exactly, some common sense approach to just manage it. Yeah.
Now, conversely, while companies we see are being paid late by their customers, they're usually very early paying their vendors.
They're right, yeah. Which further exacerbates their cash, right?
Exactly. What's wrong with this picture? And, they're very proud of their reputation in the community, and we get that.
Yeah.
But we have to educate them on what are typical standards for payment times with business owners. And so, in certain circumstances, we go through the payables and we can recommend extending some payment terms out based on the criticality of that vendor. So we want to try to get payables timing and receivables timing in sync.
Matched up. Yeah.
Exactly.
You guys do a great job, and I think you provide great advice to people that are looking at exactly this problem. Let's switch gears. Talk a little bit about PPP, Payment Protection Program. Obviously, very topical right now. A lot of companies in difficulty, and the government have come up with some great programs, right? Yeah,
they really have. And while some, I'm not a firm believer that government has all of the answers, but in this case, the PPP loan, while it's not perfect, has actually done a good job in providing very needed cash flow to business owners. And as you may know, there is now an opportunity for a second draw for a PPP loan. So if you're a company that's taken a PPP loan already and have applied for forgiveness, you may qualify for a second PPP loan. The big qualifier for the second loan is that you must be able to demonstrate that you have suffered a 25% or more reduction in revenue for any 2020 quarter versus 2019 quarter. And it's really simple. I mean, if in fact you qualify, the application couldn't be easier. The banks have usually populated the portal for you to do this. And so all you might be asked to do is upload some QuickBooks statements, supporting the quarter where you have the 25% reduction, but then you have the opportunity to get an equal second draw on PPP. And again, we think that forgiveness will be available, if not more lenient. There are actually other benefits too right now under the CARES Act that we're working with our clients on. So first of all, let me put in a pitch for B2B CFO.
Please.
We have been helping owners across the United States qualify for the loans and to achieve forgiveness. And I think the last account we had was just under $1 million total of PPP loans to a variety of different clients.
That's impressive.
Yeah, and we're happy to help them because this program does provide needed cash flow, and it has been effective to keep the doors open for companies.
It really has. And again, first round, I think there was a lot of uncertainty, a lot of confusion. Second round, I think people get it a bit better. The communication's been better, but there are some additional strings to it. Not everybody can benefit from it. But it certainly is, from what I've seen, it's benefited a lot of our clients. And, it's been that additional boost that they've needed to get through these difficult times. Good news is it works alongside what we do here as well at Eagle. We can get the subordination from the SBA. And obviously, if you get the forgiveness, or even if you choose to carry on with it, maybe you can't, you spent the money on some stuff that you can't actually qualify for the forgiveness. It's a 1% loan at the end of the day, good, cheap money. And factoring will work alongside it. We can get the subordination from the SBA. So, yeah, we've encouraged it. People have looked at it. It's helped a lot of folk out. Remains to be seen how long and whether there's any more. Things are very fluid, but hopefully the economy starts to turn around and, maybe we don't need another round, but we'll be watching it very closely. But it's great to know that you guys can help people get those funds.
Yeah, we do. And of course, besides PPP loans, one of the areas of expertise that we work with our clients all the time is capital formation. So, putting together what you need for an effective bank packaging loan or factoring. Either way, we're in the business of helping business owners not only preserve cash flow, but get the capital that they need so that they can move forward.
Wonderful. Well, like I've said, you guys do a great job, and we appreciate you because, again, you've helped us with some clients as well in terms of looking after them and helping with their growth plan. Well, that's about all we have time for today on The Money Factor. Thank you, Steve, as always, for coming in. If your business is not prepared for growth or is having some cash flow difficulty, where can they reach you, Steve, for some advice?
Well, our national website is b2bcfo.com. That's spelled B, the number 2B, CFO.com. And we're all about strategic advisory services for the business owner to move forward. So if you are encountering difficulty, please look us up and give us a call.
Thank you very much. Again, I'm Ian Varley, CEO of Eagle Business Credit. Thanks for watching The Money Factor.